Mark Zandi, as chief economist of Moody's Analytics, you take a look at the economic data, which is turning up, and it certainly is fueling this optimism that we're seeing being priced into risk assets. It seems as though the pandemic is over, at least in the eyes of many people. People are not accounting for necessarily a second wave or some sort of resurgence, even though a lot of health experts are expecting that. What would a material second wave do to both the economic statistics and the bleed through, the response to that in markets?
Yeah, that'd be a big problem. I think you're right. I don't think markets are attaching much of a probability on a serious second wave, and maybe they're right. We don't know. Who knows? But I think a prudent investor planner would probably attach a higher probability to that possibility. And if it's serious, what that means is it's disrupting businesses. Now, I don't think we're going to see government shut down businesses again. I think we've been there, done that. I just don't think there's the political will to do that. But that doesn't mean that businesses can't get disrupted because consumers will self-quarantine. They're already got one foot in the bunker. They'll run back in. They'll stop spending. The economy will be disrupted. And, that is the fodder for a double dip. So, I think we're out of recession now. We're going to grow in Q3 because businesses are reopening. But on the other side of this, we could go right back into the soup. And so this would be kind of a W-shaped economic period as opposed to a V-shaped, which markets seem to be anticipating. And so if that W does materialize, then, obviously markets have some adjusting to do. The script on the bear market and equities and the narrowing in credit spreads that we've seen, all those things will come unwound and markets will get tested again.